What's up, YouTube? I just traded here. Well, let's talk about why the majority of the markets are down, and that includes the crypto market. One main thing to note is the Feds have been supporting the market. Now, I'm sure you have heard about tapering. I think it's very important, and it's going to be the main focus of 2022. What is going on here is exactly what happened in 2017 when the first balance sheet runoff happened. Now, here is what to understand from the balance sheet runoff. But before I jump into those, let's make sure you smash the like button, you subscribe to the channel, and the bell's lit so you don't miss out on shit. Now, number one is this is similar to decreasing the amount of assets held. Number two, it occurs by selling assets, mostly when they have expired or by maturity. Number three, it will lead to a reduction of assets and returns. I believe this is one thing that a lot of people are forgetting. The Feds will be investing less. Hopefully this makes sense. I got a chart to show you, but first, the Fed minutes have brought up all kinds of ideas. They're saying they could start the runoff before raising rates. Now, here, that's not the chart I want to show you. This is the chart. Last time we experienced... Fuck happened? All right, let's go back over into it. The last time we experienced a balance sheet runoff was in 2017, and that happened from 2017 to 2019. But before that, the balance sheet grew from $800 billion to $4 trillion after the great global financial crisis. They said they would draw down $1 trillion. And they did, but that was before adding $5 trillion for COVID. You remember right here, right? This was Fed Powell with the money printer. Now, if you look at SPY or even Bitcoin, you can see the correlation on what I'm talking about. And why this is important is people are concerned because this is the final step of normalization. The supporting of the market is coming to an end by the Feds. You can see it here. 2017, they announced it, and it was just not that pretty all the way up until 2019. The beginning of 2020 was when COVID hit, and we just ballooned because they cut rates down to zero. They were really supporting the market. The last time, like I said, $1 trillion left the market last time. Even more concerning, we are hearing talks about reducing balance sheet before raising rates, but this is way blown out of proportion. I think this is just crazy and uncertain. You can even see it on the SPY right here. This is when they did it. The 2017, 2018 was that when they ended it. And it wasn't really that great. It was okay, but then like I said, we had more money come in, they cut it to zero, and it skyrocketed. This is definitely going to be the biggest topic of the year as it is related to the Feds. But please expect Powell to mainly focus on passive unpredictability. That will be the main goal they will try to achieve. I think communication will be key. The Fed will most likely communicate with us with a much clearer idea of what the size of the runoff will be this time around. I expect to see mass amounts of volatility, but as long as earnings are good, stocks can still go up. If it did get to the point where it was really, really bad, they will most definitely and hopefully start adding to it again or halt the process like they did in 2019. So I am watching this very closely, so pay attention to fundamentals. That will be very key. I'm not saying the bull run's over. I'm just saying look both ways before you cross the road. Don't forget to subscribe, smash that like button, and comment down below on what you think this means. I'm out, and enjoy the rest of your weekend.